How long will the jobs recovery really take to mend? And can we be confident that we're still headed in the right direction? All right, we've got a taking stock think tank to delve into this issue. David Semmens is an economist for Standard Chartered Bank. He is rated a Bloomberg best for his employment predictions. He was spot on today. Also with us, Michael Purves. He is head of derivatives research for BGC Partners. And with us close at hand, a little bit in Siberia maybe, Dan Alpert, managing partner, Westwood Capital. Dan Alpert, I want to come to you. You're in our newsroom there. What did you make of the jobs report? Not in terms of who's to blame, but is there something structurally wrong with the U.S. economy that we can't generate the jobs needed to recover from the recession?
Well, there's nothing structurally wrong with the U.S. economy. There's something structurally wrong with the global economy. We're facing enormous global imbalances in terms of wages and standards of living. Really, we tracked this story back 20 years, looking at the emerging nations and the BRIC countries. When you take all that into account, we had a period of time during which we sort of hid the problem by effectively doubling all of the debt outstanding in this country. And now we're coming up face to face with the fact that we need to find some way to become competitive again in global markets from the standpoint of wages. Of course, real wages are declining. Inflation is taking a hit on real wages, and as you saw in the numbers today, hours are flat, hourly earnings are flat. And of course, when you subtract inflation, that means people are making less. The question for the future will be whether we're going to see a decline in nominal wages.
All right, before we get to the decline in nominal wages and whether that will occur, David Semmens, Standard Chartered, you were spot on today. I mean, you were really the outlier before the news broke about the jobs report. Wait, 53,000. How did you come to that number? Were you just pessimistic when you put all the data together? What led you to that conclusion?
Well, earlier last month, we were actually feeling comparatively optimistic. But when we got all the leading indicators, you could really see that there wasn't any good news at all in any of the subcomponents apart from the Philly Fed PMI employment subcomponent. And that's really someone clasping at straws trying to find good news, which is what I did. So when people said, why were you so downbeat? I said there wasn't any good news at all through any employment indicator. And unfortunately, that just led us to the conclusion it's going to be a terrible number, which it was.
You got to get a little high five at the office for coming in. I mean, because you were really spot on the market. And that was, as I said, it was like an outlier conclusion for people.
I think I restored everyone's faith in economists.
All right. Restoring the faith in economists. Michael Purves, can you restore people's faith in the stock market given today's news? Because, unemployment, with all due respect to economists, it's supposed to be a lagging indicator, right? So this is about a backwards-looking economic report to some extent. The stock market is a discounting mechanism. It looks to the future. So why the sell-off?
Well, Pimm, there's been a couple of interesting trends developing since the crisis erupted back in 2008. And there's always a period when the market gets a nice bull run, and then people look towards this as, oh, this is a classic V-shaped recovery in the economy and in the stock market. And then and then there's this realization, we had this a year ago, and we're having it again today, or in the second quarter, where things are not so obvious, and it's not a 2001, 2002 type of recession by any stretch. We're coming out of we're really midway through a very deeply structural banking crisis, and so in a way, people should not be surprised that the numbers are as ugly as they are, or that they're as volatile as they are.
All right, well, let's apply this to Daniel Alpert. What are we talking about then, Daniel? Do we drag out those buzzwords, double-dip recession, and what, QE3 or maybe the Queen Mary? I mean, what do we need here?
Well, I think what we've proven rather conclusively is that increased quantitative easing hasn't really worked. In fact, I was quoted today as saying that quantitative easing is the Roach Motel of economic policy. The money goes in and it doesn't come out. Effectively, what we've done is we've not only swollen the Fed's balance sheet, but we've swollen bank reserve deposits at the Fed, and the money can't get out because, quite frankly, there's nothing really worthy to lend against right now that isn't either over-leveraged or a company that has way too much cash on its balance sheet already. So I believe that we can look back at some very, very bold moves, and I don't fault the Fed for trying, and conclude that what we got out of it was effectively a liquidity-induced rally in the commodity markets, a liquidity-induced rally to some extent in the equity markets. A lot of countries on the emerging side complaining about inflation, and of course, finally, the spillover of that inflation to the Western countries, to the developed countries. in the form of commodity inflation. And
All
of
right,
course, that's a double-edged sword.
This is Taking Stock on Bloomberg. I'm Pimm Fox. Now, in spite of today's disappointing jobs numbers, some businesses are hiring. The governor of Georgia, Nathan Deal, recently invited people from all over the country to come to his state and do some farm work. Duke Lane of the Lane Packing Company in Fort Valley, Georgia, that's near Macon, he says that he's struggling to fill all of his open positions. Duke Lane joins us now via telephone. Good to have you with us, Duke Lane.
Thank you. Good afternoon.
So what kinds of jobs are you have trouble filling?
Well, in our particular situation here in Georgia, the business that we're in is a specialty crop business of agriculture that actually requires a lot of hard work. It's hot. The work is outside. It's not in air conditioning, and we have a lot of problems being able to accommodate this kind of work, and not only right here in Macon, Georgia, but all over the state of Georgia.
Now, what kind of wages are you offering for these physically demanding positions?
Well, we're actually in a program ourselves of the Georgia Growers Association. Has about 20 members of what is known here in the United States as the H-2A program. We're here in Georgia. We are guaranteed to pay the workers $9.12. That is a guaranteed price that we guarantee them to come here and work.
All right, Duke, stay on the line with us because I want to bring in our Taking Stock think tank. We have David Semmens, of course, from Standard Chartered Bank, Michael Purves from BGC Partners, Daniel Alpert of Westwood Capital. Daniel Alpert, you were listening to Duke Lane describe the kind of work that is on offer and the wages that are on offer. Bring in the topic of wage growth and how you're going to sustain any kind of recovery with, let's say, $10 an hour jobs and the kind of wage growth that you have looked at from the report.
Yeah, I mean, of course, it's going to be very tough to sustain a recovery with those kind of hourly wages. I think that the good news for our friend down in Georgia is that he's going to find, over time, an easier time of filling these positions. When you get to the type of unemployment levels that we're talking about, and especially sustained unemployment, eventually sticky wages unstick. And that, of course, is the theory that most of us who've learned economics over the years believe will eventually cause the types of adjustments that are necessary to become competitive again. Unfortunately, when you look at the demographic of where jobs are being created and where they're being lost in that 35 to 54-year-old demographic, which for a while was really just affecting men. Now it's affecting both women and men. And they're being gained among younger people, the kind of people who can do the back-breaking work that he was talking about.
David Semmens, come in on this topic, because if you have chronic unemployment, does that then run smack into the notion that in many cases you could say Americans don't want to do the heavy work anymore? I mean, a lot of them maybe only have that as a choice, but that culturally and socially we're looking for higher skilled work to fill the unemployed, but in fact that's not what's on offer, or is that incorrect?
Well, I mean, traditionally it's been younger workers or perhaps new immigrants to a country that have done the more back-breaking work, but this is really an example of how lower paid jobs are what are being created at the moment, and what you want to see is higher paying jobs which create a vast income. If you have a job that is only going to be paying $10 an hour, that's obviously 5 times less than your average software engineer is going to be getting, and the software engineer will be spending far more of that disposable income, and that will obviously have a ripple effect through the economy. You want to see the high paying jobs being created to really also get the tax revenues up, which the federal government needs.
Duke Lane, come in on this if you can, talking about jobs. If you compare the situation this year to the same period last year, do you have more workers?
Well, in our situation, as I said, we try to hire as many domestic, local workers as possible. And when we run out of the opportunity to fulfill our needs to complete the job, then we have to look elsewhere. And that's where the immigrants, the Mexican workers, or whatever it may be, come into this, in our situation, this H-2A program, where they are guaranteed $9.12 an hour, but in most cases we see some are making $14, $15, $16 an hour.
Duke Lane, are you finding that people from other states are coming to Georgia for this kind of work because they can't get employed at home?
Well, in our situation, after we use every opportunity we have to hire people locally, people in our area, then we have to look elsewhere. And then we have people that were coming into Georgia just recently from the state of Florida mainly until our governor just recently signed the House Bill 87 on the immigration program. And now people have gotten word, all the Mexican radio stations and the Mexican people by word of mouth word is passed around, and people are bypassing the state of Georgia to go to North Carolina, where the laws are not as stringent as they are here in Georgia.
Michael Purves, the idea of regionalism, that you've got states competing against each other to get people to come to work there, this is like a double-edged sword. On the one hand, competition is supposed to be good, but if it doesn't create any real new jobs, then you're just shifting around. You know, it's like moving the deck chairs.
It's a spot-on point, Pimm, and I think this is one of the things that you also have to understand sort of in the broader context of global currency movements here, because, you know, David had mentioned, or Dan had mentioned the quantitative easing. One of the side effects, of course, is the debasing dollar, and how that's going to import our export sector, as you know. I think Bernanke, at the back of his mind, clearly wants the export machinery
to be more competitive.
To be more competitive, but to your point about competition between two states, we want to be competitive as a nation and not amongst two states.
We've been talking about today's jobs numbers and the country's nagging unemployment problem. Well, our next guest could have some possible solution. His city leads the nation in job growth. Mike Moncrief is the mayor of Fort Worth, Texas, and he joins us now via telephone. Mike Moncrief, welcome to Bloomberg.
Delighted to be with you.
So what can you tell us about the success in Fort Worth? Is this something that is going back several years, or is there something recent that accounts for the success of your jobs programs?
Well, I think it's a combination of both. First of all, in Fort Worth, it's all about public-private partnerships, working together with government, working with other governmental entities, as well as the private sector, to create opportunities for attracting new businesses, and with those new businesses come new jobs and new sales tax, and reducing our unemployment rate. But that has been something we've been doing for a long time.
What form does this partnership take? Does it involve tax credits? Does it involve job retraining? What's the role of the government, and how does private industry participate?
A combination of exactly what you just mentioned. Certainly, the incentives is a major issue to be able to compete and attract things like General Electric with their locomotives that are going to be constructed here in Alliance, just north of us, and bring in 500 jobs along with them, and those are high-paying jobs. And that just recently happened. We were in competition with Mexico and a number of other cities outside the state. So it is that piece, as well as having the institutions of higher learning that we prioritize. Everything from the TCU to University of Texas at Arlington to Texas Wesleyan, and our junior college system, which is outstanding in its own right, TCC. And I think that the other thing that has helped us, though, and that is having a shallow gas field 7,000 feet below us called the Barnett Shale, which is the largest natural gas deposit in the country. And they have drilled well over 1,000 wells in our city alone. So it's those new jobs that come with that industry. We are very balanced in our economy. We're no longer just about oil and cattle in Texas. We're very high tech, and we're able to attract the new businesses that want to locate here. When you add that to not having an income tax in this state, it makes for a pretty effective magnet.
Michael Purves, you're listening to Mayor Moncrief describe the situation there and the competition, at least for that General Electric locomotive plant. Talk a little bit about regionalism and what you see in the future for the different areas of the United States.
Well, one of the factors that I'm concerned about over the broader term is that there is going to be a lot of polarization among regions. Mayor Moncrief has done a really excellent job with developing these public-private partnerships and exploiting the shale gas and bringing jobs there. Arguably, he benefits from the fact that Texas is in a region that doesn't have one of the worst housing situations as well. It gives him more flexibility to go in and implement these very sound policies. Other regions in the country are going to be, I think, a bit more challenged over the longer term because they have a combination of too much housing supply from the real estate bubble, very high delinquencies, and concurrent high unemployment. And this is going to drive tax policies in these states and counties and towns higher and arguably push a lot of those good jobs to places like Fort Worth.
Daniel Alpert, the idea that maybe we could learn something from Mayor Moncrief, can it be applied to other areas of the United States, or is he just kind of lucky to be in Fort Worth?
But to some extent, I guess he's lucky. I guess anybody in Texas is lucky to be in Texas. But the upshot is that certainly the Southeast is going to see greater competitiveness going forward, and that gets a little bit less so as you move west. But there's without a doubt we're going to be in a situation where our somewhat lower wage environments are going to have greater competitiveness. But I want to say one thing: keep in mind that Texas, as a rule, did not see the type of bubble the rest of the country did, and to a certain extent, the amount of household debt in Texas, the overhang of household debt, is not as great there as it is in many other regions, specifically the coasts. So you're talking about a slightly different environment. They didn't really party as hard while all the rest of us were losing our minds. But by the same token, they're not suffering as much this time around.
David Semmens, last point to you. So if we can learn something from Texas, is it too late? I mean, we've already partied, as Daniel Alpert describes. What can we do now?
No, I think you have to make it attractive for businesses. You want to make it attractive for businesses to be onshore in the States. You want to be doing things that can't be moved, and you want to be doing jobs that are high paying. So therefore, making tax
Mayor Moncrief
cuts,
was talking about things like not having a state income tax.
Right, not having a state income tax makes it very attractive to move there. Having low corporation taxes within a state makes it very attractive. And also, perhaps the federal government was to make high unemployment areas have a lower rate of corporation tax, that could act as a stabilizer.
All right, I want to thank you, gentlemen, very much. David Semmens, Standard Chartered Bank; Michael Purves, BGC; Daniel Alpert, Westwood Capital; and Mayor Mike Moncrief from Fort Worth, Texas.